Everyone in the crypto industry knows that XRP is here to make its holders rich. Ripple, the San Francisco-based payment company behind XRP, is a proof for this. In a little time, it has gained so much and has almost conquered every bank and financial institution of the world. Its cryptocurrency is being adopted on a global level and depicts a very bright future in regards to its value. Almost everyone owns at least a few XRP, but it's now being planned out to shake these weak holders out. How is this possible? Or if it is really going to happen? How is the lawsuit also a part of this? And what is the price prediction for XRP in this time of crisis? That and all in just today's video. But before we start our video, welcome back everyone to Crypto Millionaires, a channel where you get your daily dose of XRP. If you like the content, do give it a thumbs up. And if you want to see more, then don't forget to subscribe to the channel and click the bell icon so you can know every time we upload a new video. Now, let's get to the video. Soaring prices are emerging as a feature of the post-pandemic recovery around the world, causing some central banks to shift their focus on fighting inflation. A major warning came when Fed Chair Jerome Powell indicated bigger interest rate hikes ahead. Powell said in an IMF debate in April that "I would say 50 basis points will be on the table for the May meeting." The Fed battles to keep an inflation rate that has risen to 40-year highs in recent months under control. According to the sources, first quarter corporate earnings continue to beat analysis estimates on both the top and bottom lines. According to data from Fundstrat, of the 95 companies that have reported so far, or 19% of the S&P 500, results are beating profit estimates by a median of 6%. Meanwhile, revenue estimates have been beating by a median of 3%. Cryptocurrencies are still trading sideways, with Bitcoin being in a bear market. This was a major warning for a price drop and the biggest crash for some cryptos. This is not just it. The current situation of Ukraine and Russia also posed a major threat. The National Bank of Ukraine, or NBU, is putting substantial limitations on cryptocurrency purchases in order to prevent money outflows amid martial law. Cointelegraph reported that the Ukraine Central Bank imposed a set of cross-border limitations, barring citizens from purchasing cryptocurrencies such as Bitcoin, or BTC, using the national fiat currency, the hryvnia, or UAH. Ukrainians can now only buy Bitcoin and other cryptocurrencies with foreign cash, with a monthly maximum of 100,000 UAH, or $3,300. International peer-to-peer transactions are also subject to the relevant limit. The restrictions are said to have raised eyebrows because the Ukrainian government has been working hard to legalize cryptocurrencies while the country is under martial law. President Volodymyr Zelensky of Ukraine approved a measure in March, establishing a legislative framework for the country to operate a regulated cryptocurrency market. On the other hand, sanctions on Russia are threatening its multi-billion-dollar crypto industry. According to experts, sanctions imposed on Russia as a result of its aggressive invasion of Ukraine may stifle the country's multi-billion-dollar cryptocurrency business. CNBC reports said that U.S. officials targeted Russian Bitcoin mining firm BitRiver in its latest round of sanctions aimed at hurting Russia's economy. The Treasury Department's Office of Foreign Assets Control says it is concerned Russia may monetize its vast oil reserves and other natural resources with power-intensive crypto mining as a way to raise funds and get around Western sanctions. Meanwhile, Cambridge University figures show the country is a powerhouse in the field of crypto mining. In August 2021, Russia accounted for about 11% of the global processing power used for mining new units of Bitcoin, according to the Cambridge Center for Alternative Finance, making it the third biggest mining hub behind Kazakhstan. These, we can say, are just a few factors that are going to crash the market. In the case of Ripple XRP, this is not the only contributing factor. The lawsuit involving Ripple and the U.S. Securities and Exchange Commission, at first, was also thought to be for the same reason. It caused the XRP to delist, and its value also fell drastically, making much of the investors get rid of it. However, it is still going on, and we cannot say whether it is going to reach a conclusion soon or not. Currently, the defendant's lawyers have filed a response to the protected emails of William Hinman, the former director of the Division of Corporation Finance, in the SEC's proceedings against Ripple. Hinman's emails are shielded by the attorney-client privilege, and the regulator has requested that they be kept private. Recently, a judge allowed the SEC's request to file a reply brief in connection with the SEC's attorney-client privilege allegations surrounding the 2018 communication made by William Hinman, giving the SEC a tiny victory in the ongoing case against Ripple Labs. Uncovered emails revealed that Hinman knowingly had a conflict of interest in making the speech before delivering it. He had indicated back then that Ethereum was not a security. He stated, "Based on my understanding of the present state of Ether, the Ethereum network and its decentralized structure, current offers and sales of Ether are not securities transactions." The court has directed the Commission to display the disputed memos related to the 2018 speech. The SEC has been hesitant to produce them. Now, Ripple slammed the Securities and Exchange Commission's, or SEC, decision to restrict documents critical to the lawsuit in a recent letter. Ripple gave 4 reasons to why the SEC should release the Hinman memos. The defendants have sought that the SEC release the DPP redactions, as well as any memos withheld under the attorney-client privilege, for an in-camera examination. They even asked the court to conduct its own examination of the redaction. The lawsuit started about 1.5 years ago and has deeply affected the value of XRP. Along with that, the recent dip in the market is also contributing to the downward trend in the value. However, the experts are still positive. Kevin Cage, a crypto analyst and trader, evaluated the XRP price trend and set a bullish target of 86 cents, followed by a $1.32 and $1.70 for the altcoin's price. Cage compared the current trend to March 2020 and December 2020, when a pullback to 11 cents and 17 cents was followed by a 1,000% climb in price. The price of Ripple has dropped dramatically in the first half of May. However, the bearish momentum may soon shift, as the price has dropped by almost 50% since the latest swing high at 65 cents. The recent robust rejection of more downside may be the first sign that the trend has poised to change. Furthermore, the subsequent greater reaction and effort to go lower suggests current weakness for selling. Compared with the Fed's last tightening cycle, which began in 2016, crypto is a much bigger market, raising concerns about its interconnectivity and the rest of the financial system. While the entire crypto market is small, stablecoins, digital currencies tied to the value of traditional assets, have been identified as a potential danger to financial stability by the U.S. Federal Reserve, Treasury Department, and the International Financial Stability Board. Stablecoins are primarily used to make trading in other digital assets more convenient. They are backed by assets that may lose value or become liquid in times of market stress, and the rules and disclosures surrounding those assets, as well as its investors' redemption rights, are unclear. Regulators have warned that this could lead to a loss of investor confidence in stablecoins, particularly during times of market stress. This happened recently and took the entire crypto market down with it. This can also be seen as an opportunity for many to buy the dip despite the plans of being shaken out. According to the CoinMarketCap data at the time of writing, the XRP price today is 49 cents USD with a 24-hour trading volume of $3 billion USD. XRP is down 3.74% in the last 24 hours. The current CoinMarketCap ranking is number 6, with a live market cap of $24.1 billion USD. It has a circulating supply of 48.3 billion XRP coins and a max supply of 100 billion XRP coins. So guys, this is it for today's video. I hope it could be a big help to you. What do you think about the current situation of the market and XRP? Are you among the ones who will buy the dip? Share your views in the comments section down below. Don't forget to click the bell icon, and thanks for watching.